And I think to myself, what a wonderful stock market. Waiting on peeps to roll in into the live stream. Getting all the notifications out right now. So yeah, looking like that channel, we did break through the bottom of the channel, but not by that much. Looking to see, wondering we might actually... Hey, Pringleton! Just like Celine Dion. Yeah, I'm a tenor solo. 10 or 12 miles away solo, you can't hear me. That's my best singing voice. So going off the channel that we built in last week, we're still holding the lower edge of it, and almost might be time to lower that line just a bit, because lines can always be moved. I don't want to be the type of person who will move the lines to manipulate the data or to to support my own thesis. But I do think that moving the lines around from time to time just gives you a healthier outlook. That upward channel we're in, we blew right through there. That was no support this morning. Was actually hoping that at this intersection point, right about 3160, that this was going to hold up. And we started a little bit of an upward movement right away. I think that was still in pre-market. No, it was after market open, and just punched through, and it's been a rundown ever since. Well, see, Pringleton, the thing when you throw a pennant out there, it's either going to break through to the upside or break through to the low side. It's always going to come to a point, and at some point it has to break through. And the breakthrough on the pennant was perfectly timed, looking at the lower volume that came with the lower volume of Thanksgiving week. It made it a lot easier for them to push through, or to put that downward selling pressure, just because people were out holiday shopping, Black Friday coming up, or in the week prior, people were saving their money up, looking to go out and get the Black Friday deals. And the lower volume, continued through. They always have Cyber Monday, where Monday deals on electronics. So it was almost predestined that we were going to be lower volume, and that unless the hedge funds immediately pushed us through and then tried to cover their positions, I had the feeling we were going to end up breaking through to the downside. So now it's just, doing a reevaluation of where we're currently sitting. We got to look for this lower level to hold up. We did break through a little bit. I put these on, I think I put these marks on probably about the 6th or the 7th. I think the support and resistance were the 6th, and on the 9th is when I built the upward channels. Hey, Riptide, thanks for popping in, man. Oh, I need to move my camera just a bit here. So yeah, it's today's an excellent dip buy, especially if we do hold, if we set a new channel, even if it's a narrow channel, if we get some kind of support and can look towards bouncing up, that this could be a perfect window for people to step in and buy. I know I did. I ended up picking up another 30 shares this morning, and that closed out another brick. So once we get stabilized and option chains open up to a lesser risk, I'll have another brick of 100 that I can use towards earning back some of the money, to building more of a position. And I also, on the other side of the house, I ended up picking up 100 of Prague. Because looking at Prague, so this one I actually had it set up as an upper and lower channel, because it held stable for a little while, broke through, looked like it wanted to play in this range, and we broke back to the high side. Picked up a few more today. Yeah, tasty dip. Yeah, that dip is always delicious, always good to get. But so Prague, I'm looking to see, if this dual channel SPY is going up. We'll pop over to SPY in just a second. Looking at it, I see two distinct channels forming on Prague. Hey, Wrestler, thanks for popping in, man. So two distinct channels. So, if you were looking to do like micro swings, just looking to pick up a couple bucks here, a couple bucks there. If this continues to play out where we get the lower channel and the upper channel, just watch for the break, play in the lower channel. That's where you buy. And if it moves up a bit, we're only talking, 50, 60 cents a share. But when you're dealing with 100 share blocks, that's, $50 to $60 on every swing you do. So coming in and being on the low end of the channel, buy 100 shares, even if you wanted to play. Now, because of the option chain, the strike prices are set at 50-cent increments. But if you wanted to play, the $2 range on cash secured puts, and then play, when you get filled, play the upper range up to $3 on covered calls. You can sit there and bounce back, and every turnaround you're making, depending upon what strikes you go for, whether you're doing the $2, the $2.50, or the $3, you have potential, you can swing $100 a trade right there, plus you're collecting your premiums. So if this dual channel holds up, this could be a really, really good way to make some consistent money, as long as it doesn't break through the bottom. And remember, when you are playing, this is not financial advice, but take into account how much you want to have on standby in case you do get your run up. You don't want to have 100% of your shares locked on covered calls, and all of a sudden Prague jumps to $20 a share. You're missing out at that point. It would cost you a ton of money in order to buy into stop loss to get out of those positions. So generally, if you're playing 25 to 30% of your position in covered calls and leaving the rest of it on the side, you're protecting yourself against missing out on a run up, but you're still going out there and collecting a little bit of cash, and that cash you roll back into your positions. If you're playing a $1 wheel spread on, or I shouldn't say spread, but if you're playing a $1 rotation on Prague, and you're using that $2 level, $3 level, and you keep bouncing up and down, every time you rotate from high to low on your cycle and collect, $100 more profit. Well, right now at AMC share prices, we're looking at 3.5 shares for every rotation you do. Hey, Danelle, welcome to the chat. So that's, the red days are hard to look at. But if you know how to play the low end is where you're going to make money on red days. So, whether you're playing shares or you're playing options, whether they be spreads or individual positions, learning how to play the low side. Everyone else, is ready to turn off their screens. I don't want to look at it. It's horrible. The market's down. Everything's red. Okay, well, why aren't you, why not go out and learn how to make money on those on the low side? So yeah, SPY definitely. So this is kind of following on the 7th. We had the gap up, and it has been running. It has been running in a nice, decent channel. And it looks like there was a push down yesterday to close out the day, which the push down that was market wide, and that was looking at the inflation report. I think it came out of. Anticipation was for 3.7%, and it actually reported at 3.8%. And this is what a 0.1 difference on inflation looks like in the market. And a lot of it, they knew what was coming, and it looked like the market pretty much priced it into yesterday, and that's why we saw so much of a pullback across the entire market. So if they preload the market, if they know it's going down, and they want to preload the market, and you see those dips coming down, and you know that information's coming out, if you're savvy and if you're willing to take the risk, you can enter in on those push downs. I mean, if you look and see how hard it got hit at the end of the day, if you time it out and you know that if you look for it to be in response to news coming out in the near future, buy in when it's low and wait for that gap up. If it gaps up the next day, if you are susceptible to pattern day trading, a nice push down at the end of the day in anticipation of a possible gap up the following day, that is a great way. If you have a smaller account and you're susceptible to pattern day trading, that is a good way. End of day, close your open a position and close it the next day, because whether you're dealing with options, which are a T1 settlement, or if you're dealing with shares, which are a T2 settlement, no matter what, it's always going to closing out one day and opening the next day, or opening one day and closing the next day. That's a perfect way. It's a 1 day swing. You're not in that day trading pattern, or in that day trading window, but it's still a chance for you to get the same effect. You're just waiting till the next morning. And this is a classic example of when playing aggressive like that. If it's within your risk tolerances, and if you have enough capital standing by to make a play like this, that's a perfect setup there. It will even look at it. Now the prices will change. We're going to pop over the options market on the SPY here in just a minute, but looking at it, we won't even go off there. Let's go off. I'm trying to look at the times here. So yeah, we'll go right off 1500, and we'll grab somewhere in the candle here. How far down did that candle go? We'll just call it 467, and we'll do it conservatively. We'll grab this low candle. So that's we're looking right here about $1 difference. Well, if you go over to your option chain, if you were looking to day trade it, and of course these numbers have changed since yesterday. The share prices affect it, theta affects it. All these have changed, but we're going to go over to single on calls. So let's say we had a move like that coming up, and so we're going to go off the 69 price, just like 469. We're going to look at a $1 move. So you go ahead and you're going to look at let's look at the 472. You're going to collect $1.88, or you're going to pay $1.88 premium to enter into your calls. So if it moved up and opened and you got out $1 up, those contracts would gain you almost $38 per contract. Now, theta is spread out throughout the day. It's not like every day at noon theta kicks in. Theta is a steady decline, and by taking your position and opening it at the end of the day and then closing it first thing in the morning, you can negate the theta, because normally if you bought at noon and sold at noon, you're going to lose $20 worth of value per contract. If you do a close to open swing trade, whereas you're opening and closing it the very next day, you're negating theta. Theta will not affect you. Theta will not cut into your profit margin. So this almost $38 that you would earn would almost all be profit. You might see a little bit of bleed over depending upon how quickly you get in and get out of the position. You could maybe look to lose about $1 or $2, but $1 or $2 is certainly better than losing almost $21 on a 24-hour time period. So on a low market day, these are little things you can look at. Start learning your technical analysis. Start listening for news. If there's going to be a major report coming in from the SEC or from the Fed, if there's a major report coming out, or even an earnings report, where if you see, if you think your stock is going to hit good on earnings and you think there might be a little bit of upward swing coming, but everyone, towards the end of the day is getting worried, especially anyone who does earnings after the market is closed, you can tend sometimes to see a little bit of a pullback towards the end of that day. Well, if you see that pullback coming, but you're thinking it's going to be a good earnings report, then that would be a time to slip in, buy when it's getting pushed down a little bit low, just from people, locking in their profits or whatnot, and look for those positions and look to get out very early the next day. Remember, anytime you're buying, theta is your enemy. It's, theta is your friend when you're a seller. If you're buying, theta works against you. So the faster you can get in and out of a position, the more money you're potentially going to make. Now, of course, if it dealing with things like the MOAS or any short squeeze position, anytime that rips, if it rips past and you're already out, you miss out on it. But the MOAS is, I'm buying my shares, I'm holding my shares, I'm waiting for the shorts to cover. Day trading and swing trading is separate from the MOAS. When I buy, if I do buy a call position and I'm looking to make money on it, I'm not looking to hold for a rip to the moon. I'm looking to lock in profits, and whether they be 30, 50, 70%, those profits, if you can walk away the next day up 70% on your position, that is a huge win. So yeah, the gap up on the SPY, and even from the low end here, if you were seriously paying attention and playing your technical analysis, looking at it, let's go ahead and jump in on the 1 minute here. SPY certainly looks like a good teacher today. So if you were looking and timing and bought in this window, and this is Monday morning quarterback, of course, because you don't know which way it's going to go, but if you entered in on this position looking for the run up, this is a nice area to get out. You see it peak up. You can see it start. Your MACD starting to come together. You're not guaranteed a crossover, but if you're playing the odds and you're already up money, yeah, that crossover, if you get out before it actually happens, that's more profit to you. But that would be a good exit window. Or even if you held it, saw trading sideways, started to think, okay, well, starting to lose just a little bit to theta, and I'm not gaining that much, and you see that pullback, this is still well within the window of where the little bit of price movement down and the little bit of loss to theta isn't going to hurt your profits as much. And if you were iron handing it, I wouldn't call diamond handing, because diamond handing is where you're waiting for diamond handing on day trades, you're waiting to see if you get that power hour run up, and I don't like waiting till power hour, because sometimes the power's turned off and your share prices go down. But certainly, if you started to see this run up, and then you're sideways trading, this is a good exit, and this is a good exit. Even though if you exited here, you missed out on the additional run-up, you're still going to be capturing good profits, probably at about 20 to 25%. And 25%, that's money you didn't have when you started the trade. So let's go back over to AMC. And yeah, it was right in here, this is where I end up getting my shares. I was hoping when it came down that I would get the reversion. If you notice, the MACD was starting to tighten up just a little bit. I was hoping for a crossover and we'd start running from there, but it did continue downward. And I was wishful thinking, hoping that my trend line, hoping that this level of support would hold up and we'd come back up and recapture it. But it looks like that solid 26, that I'm going to keep that in mind for future reference when I start moving back into these positions. That maybe to hold a little bit longer before I buy and wait for this 26 level to kick in, because I might as well just throw the line on here, because it is a good place to. It has been holding up fairly well. Let's go back out on the 30-minute. Yeah, those solid dollar lines, we haven't gotten anywhere near it before. Going back to the 28.91, that was back in August. So if the 26 can hold up better, we did have the breakthrough where we dropped down to 25.31. I did say hi to Janelle when she popped in, didn't I? I think I got everybody in here. Pringleton, Riptide, Wrestler, and Danelle. Everyone coming, hanging out in the midday. So on the 1 minute, yeah, when we did that breakthrough, I mean, certainly held up nice there. This is on the upper, oh, that was on the upper, not the lower. How far back was that? Am I missing something here? Oh, there it is. No, that's not it. See how far we have to go back? There it is, finally. Okay, start of the yellow is what we were looking at. So yeah, looking at it, when we punched through, that was a half-hour period. That was 30 minutes that we spent below that line. I think that 26 is definitely a really good place to be. Well, granted, we want stock price to go to the moon, but that 26 is certainly looking to be holding up strong. On the 30-minute, 2 candles only below that line. So yeah, if I see more setups like this, I think, not financial advice, but in my own personal trading plan, I think I might try to actually hold a little bit longer to see if we get back down to that 36 point. Because that's the difference in where I got filled and where we dipped down to. That's 50 cents a share. Well, buying 30 shares, that's an extra $15. Well, I'm also I entered in and got some more shares on Prague. Well, Prague, $15 on Prague. Oh God, now I'm going to force myself to math. That'd have been another 6 shares. Granted, I just went for an even block on it. But yeah, that's kind of where we're at on today. And certainly I'm still looking to see, does this upper channel, do we recapture that, and can we run in that range throughout the rest of the day? I still think it has the potential to hold up as a good support level. And does anyone in chat happen to have questions? And I still think, yes, I would be House Slytherin. Because this is the Carbon Fiber Viper, so yeah, I would have to be House Slytherin. I don't think I could fit into another Harry Potter house. AFK playing Mr. Mom today, keeping stream going for Algo. Well, Riptide, I certainly appreciate you helping the algorithm out. We did. Now, I did not stream yesterday. Yesterday was the last day of my vacation, and I spent some time with my fiance. But from Wednesday's streams, we did hit over 100 hours of watched content, and we are up to 48 subscribers on the channel. So those are the milestones we're currently at right now. I cannot wait till we get up to 50 subscribers and then 100. 1,000 is a long way out, but hopefully the community continues to grow, and word of mouth of people who support the community, who are in here every day. That's part of how we're going to grow. Now, I've been thinking about here at the end of the year, and everyone always wants to know, when are we going to the moon? When are we going to the moon? And I started to think, not fundamentally, not anything like that, but more psychologically. And we all know that the hedgies love their money. So one of the things people was looking at was the possibility of them covering their positions at the end of the year in order to get the tax write-offs for capital gains, for taking the loss. And I don't like doing predictions on dates, But I was thinking that it is possible they also might be looking towards January. Now, not just because of the January run up last year, but in December, if you know you're going to be taking a loss and you don't want to, you're in a position where you don't have to take it this year, but you know you're most likely going to have to take it the following year. By covering your short positions and closing out in January, it kind of gives you a benchmark on how far behind you are for the year. And you've already got a built-in tax write-off for the following year. When the shorts go to cover, they're going to take a huge loss. And do they take it this year and try to use that as an advantage for next year's money, or do they wait until January possibly and cover in January, and that way they know how far behind they are, and that they could use that to see what kind of trading plans they would have to do for next year. So I'm kind of wondering, I would certainly love for the MOAS to happen this year, but I'm also wondering from a psychological level if they might be looking to do to close their positions, take their losses in January. That way they're kind of behind the power curve, or not really behind the power curve, but they know how far behind they are financially for the year, and they can take necessary steps to try and make up for that loss. Because if they covered right now, there's no way they could make up their positions before the end of the year. It's a loss is a loss at that point. So I'm wondering if in January we might see some of the hedge funds start to cover their positions. This is all speculation, not financial advice, not anything to build a trading plan on. But lately, with that thinking, I'm thinking about being more aggressive on how I play AMC, just for the possibility that if they are of that mindset, they might be looking towards exiting their positions soon. So we're going to jump in AMC here. I do kind of want to have a look at the option chain. Of course, not today. Any premium you've got. If you jumped in and tried to do covered calls today, the only real way you're going to get decent premium is playing 27. And if you look, we're 50 cents away. A little bit of power hour, and that's way too much risk, in my opinion. And the same thing, we'll look at the bull puts. All it would take is a little bit of a breakthrough. The best price, 25.26, you're only getting $10. 26.27, well, that's already, you're right in the middle, and that's just not a good place to be when playing bull put. When you're playing bull puts, you want both your strike prices outside of the current share price. So really, there is. Hey, Simon, welcome to the stream. So looking at the bull puts, today, if you wanted to, pick up a quick dime right there, you could, but that's the potential risk is just. The risk versus reward just doesn't line up. So looking 7 days out, looking towards next week. So 26 has held up fairly decently. If you were looking at bull puts based on that 26, because we had that punch through for like 30 minutes. And other than that, we've been holding fairly well on the dual channels right now. But if you were worried about that 26 holding up, for next week, looking $32 premium collected on bull puts for next Friday at the 24.25. That's a pretty decent amount of money. If you're looking to quarter up, to right around 25 cents per contract. That way, if you're doing a block of 4, if you have $400, we'll turn 400 into 500 on the 23.24s. On the other side of the house, doing covered calls, knowing how easily we can run up to 40, none of these values are worth your shares, in my opinion. I will I like to do covered calls when we're closer to the $40 price. If we see an early run up next week, if we get into 35 to 37, yeah, I might look at covered calls for the end of the week. Just see if there's a good strike price where I could jump in and collect a quarter. And as I stay at the beginning of the stream, I did buy shares this morning. Bought 30 shares to open up another brick, so I've got another potential covered call contract. So that's it's nice. If you're playing 25%, every fourth brick you get basically opens up another contract to you. Now, looking a little bit riskier, let's jump back over to the verticals. And let's look at the monthlies in January. We're on puts, we're on vertical, we are on the January monthlies. So looking at the January monthlies, if you don't mind having your money locked up for a while, because for every contract you do, you have to have premium, or you have to have collateral locked up anytime you're selling. You have to have collateral, whether it's a bull put spread where you're doing the difference between the two strike prices multiplied by 100, because you're doing a 100 share block. So $100 per contract. If you're doing covered calls, it is your shares that are locked up, and if you're doing cash secured puts, then it is the your strike price multiplied by 100. So if you were doing 25s, then you would have to have $2,500 locked up. I don't play those because I don't like locking up actual capital I could be using. But yeah, the 24-25s for the January monthlies are currently paying out 50%. That's if you hold it, of course. Now, if you enter into these, if you sell bull put spreads and collect your $50, and we get the run up back at $40, $42, these could drop down to $5 a contract. Well, that's 90% profit. That's yes, I'm going to lock in my profits at that point. Lock up profits, free up your collateral. So yeah, basically running at, you would end up turn $100 into $145 if the market went your way. So yeah, near future, those are, if you're looking to play, next week will be the December monthlies. If you're the type who likes to plan out a month ahead on what you're doing, especially with options, planning a month out, your theta is not going to be ticking off as fast, but it gives you a lot of time for the price to move away. And if you get far enough away, that's when you start getting a lot of value on spread plays or any options position to that fact. Let's go back down, check on Amy down here. So yeah, looks like it might try to just run in this 26-27 channel for the rest of the day. Which, if you have any kind of option positions that are currently out of the money, hey Pugnacious, welcome to the chat, man. If you have any kind of option position and you're out of the money right now, running a nice channel like this, that's just works to your advantage if you're selling. A lot of times I keep forgetting about the buying side of the house because I don't do much buying of options unless I'm directly day trading. I like to avoid buying options. But if you certainly sold to open any positions, sideways trading is so great for you. That's Uh, That's just a day where you sit back and earn money. So did everybody? Yeah, it looks like everybody smashed that like button. Wow, 100% likes? Really? One, two, three. Now, of course, as you can see, I'm in my work attire, so this will not be a full clay to clay stream. This is a lunch break update for everybody. Yesterday was the last day of my vacation, but it was nice that I come back on a Friday. Work one day because us maintenance guys, we work in pairs, so it's each area has it to where we can kind of split up. We kind of split up who's if I took 4 days off and the other guy wanted to take the Friday off, it's no problem because we cover the same area. So yeah, I came back in for a day, and then I've got the weekend coming up, Saturday, Sunday. Work another 2 weeks. During that 2 weeks, it'll be more of the 1 hour updates, and then from Christmas Eve, I am off through the New Year. So we'll definitely have a lot more streaming time coming up. Coming up after Christmas. Sheeb is green. Of course, green is a relative term. Still kind of down on that low range. Let's jump in. Oh, Riptide wants a little bit of story time on the carbon fiber Viper. Okay. Yeah, that's no problem. I'll throw Amy up on the screen while we're going over that. So, as everyone knows, apes are diamond handed. And in order to make diamonds, you take a chunk of carbon and put it under pressure, put it under heat, and wait a long time, and that's how you get diamonds. It's from a chunk of carbon. Well, I was thinking, ways to nickel and dime the hedge funds and also grow your position. And for me, the diamond is representative of a brick, a 100 share brick in the underlying stock. 100 shares of AMC. That's a brick. That's where you can enter into a covered call position. So until you have those diamonds in your hand, basically you got a little chunk of coal, and you take that coal and you keep working it and keep adding to it, and eventually it turns into 100 shares, and it's one of your diamonds. And you hold some of your diamonds and you cover call some of your diamonds. But you always have a trading plan. When I talk about entering into cover calls, always try to make sure you know where your stop loss is. Know how much loss you're willing to risk, and make sure you've got the capital to exit that position. You got to protect your diamonds. That's very important. So the fiber has two meanings because, as you know, carbon fiber is super tough material. Just an amazing piece of material you can do almost anything with. So carbon fiber. But also, I work in the cable industry, so there are times I work with fiber optic cables. True story: time plus pressure equals change. Yes, and the Viper. You always hear, you hear about the bulls and the bears, and then people start talking about the apes and the snakes. The apes are diamond handing, and the snakes are shorting the stock. And I thought, the Viper. Why can't we have snakes on our own side, people who know how to go out and strike against the hedge funds? Because we have to have people diamond handing, we have to have people holding the stock, and creating that time pressure. But as a community, unless something fundamentally changes to cause the MOAS, eventually the hedge funds will run out of money. But they run out faster if people are out there attacking the hedge funds, going out and striking against them, and thus the carbon fiber Viper was born. It's basically coming up with an option strategy to not only people want to just buy calls and hold them. Well, no. If you sit there and you're selling positions, if you're selling covered calls, if you're selling bull put spreads, you're striking against the hedge funds. You're striking, and adding to your position. And how can, if you're smart about it, and if you get in fast, if you take a bit of money from them, you get out, and then you buy more shares, how is that bad for the community? So yeah, I just kind of wanted to initially this started off, and it still is, mainly focused on the option side of the house, and not only the option side, but how to play the options on the low side, how to attack when the stock is down. Rather than just sitting there, looking at the screen turning red. Okay, well, the screen's out there turning red, but you can be improving your position even though the market's down, and not just I've got so much money left in my paycheck, I'm just going to throw it all into buying shares. Well, no. If you take that money, buy some shares with it. But if you can spare an extra 100 or 200 and enter into a bull put, and earn an extra $50 off it. Well, you keep that. When your collateral gets released on those bull puts, you get that 200 back. Well, you can take that 50 and you can either add it to keep going till eventually you get to the point where you're now doing 3 bull puts and then 4 bull puts. You keep multiplying your position, or you keep that same 200 rolling, and every time you get your premiums from your bull puts, you're going out and taking that premium and buying shares with it. So it's a way to multiply your position, but not just where you're waiting to get paid from, for those of us who have, an 8 to 5 job. I'm not just waiting for my paycheck to hit. I'm going out and I'm attacking the hedge funds. I'm attacking the market. I'm making money, like I stated this morning, that I closed up some of my option positions that I had open, and I used some of that money to enter into buying shares. So yeah, Riptide, that's pretty much where it came from. It was just and the main reason I started the channel was being on the streams and hearing people, I got these, I bought these calls. What do I do with them now? Or my calls are expiring today, and they're not worth anything. What happened with them? I wanted to get information out of people who don't really, people who are entering options and don't know, didn't read up enough to know the basics on it. And also to get in and give information, when I would give the options updates, just giving the numbers to Clay, and he would read them off. Well, it's a lot better to, get it up on the screen and have people who are interested coming in and looking at it, and not only give out data, but, give out information and show people that, you have the potential to make money on both sides. Speaking of, let's get in, and we want single calls. As you can see, the options ending today. Hey, D14. Not able to read the chat, but listening. Yeah, I appreciate you stopping by, man. It's always nice to have people pop in and visit and hang out, just to hang out. So yeah, it looks like a lot of people were taking out the calls. Now, unfortunately, I don't look at when the calls came in. I could jump on Market Beat and it would show me the change since yesterday. But I don't know if this was people looking at day trade, swing trading options, or just people that were that had YOLO. They figured it was going to go down, and most likely this was people who had a really, really great deal. They got a great fill when when the price was running down and the volatility caused change in prices, these would have gotten really, really cheap. And people might be. Am I looking at this side of the house right? Yeah. Depending upon when they got in, these might be actually be printing based on depending upon what the volatility was when they got in. Got another 10,000 up at 22. Oh, derp! I was on the wrong one. Those are 42. I was wondering why they were so expensive. Yeah, those are way far out. Because I was looking at those monthlies. I distracted myself. So as you can see today, now these are only weeklies. People were hopeful we'd get back up to 35. I actually thought we were going to make a run back up to 35. Day's not over. We still have the potential, but we are fairly far out from the 35 right now. Next week being the monthlies, and I believe this 40 is the $40 strike on these calls. I don't believe there's been too much of a change on these. I'm fairly certain it's been right about that price, or right about that many contracts the whole time. A little bit of interest down at the 25. People might have picked those up, when it dropped down, when it tagged below 36. Some of those might have gotten entered into. People seeing a good deal, and I didn't look at the option chain yesterday, so if I looked at the numbers right now, it wouldn't really give me good context because I don't know what they were the day before, which would have been the last time I actually looked at the market. Here's a little tip that I do on the days when the market is red and bleeding money out. If I do not have trades that I'm actively working, if I don't have positions that I'm in that might need my attention, I turn it off. And not because I'm sick of the red, but just because I don't have anything going on. A lot of times if I'm listening to a stream and I hear people start talking about the prices running up, yeah, I'll open up and have a look at the charts, but if I'm not actively trading, I don't have to stare at the numbers all day. I know any active positions I have, I know where I'm at on them and where I want to be. And if I don't go where I want to be, I don't pay attention to them. That's one of the things you got to look at is if you can't stand seeing the market red like that, but you're secure in your position. This definitely is one of the key differences between options and shares. If you're long playing options, or if you're just sitting on shares waiting for something to happen, you don't have to babysit them. It's when you're swing trading and day trading options or shares, more so on options because they have an expiration date. That is when that's when you should definitely be paying more attention. But if you're in a position that you don't have to babysit it and you can't stand seeing the red, just turn it off. Don't watch it. Pop onto a YouTuber, listen to the stream, and go about your day and enjoy it. If you've got money that's burning a hole in your pocket and you're looking for a position to get into, spend a day or two, just especially on red days, spend time watching a down market, watching how down market reacts, and start watching for those turnaround indicators. Claybro, I believe it was Wednesday, he was talking on the stream. Somebody asked, what indicators to use. Well, if you look at my screen here, I don't play a lot of information on it. RSI, MACD, watching for the MACD crossover, and the regular candle chart with some nice little lines that I recently figured out how to put on and started using because most times I didn't look at it. That's one thing about putting lines on the screen. You look at it and it's like, well, that's a total letdown. We had this nice little upward channel starting. I'm like, Yeah, that's gorgeous. If we keep following that, and then boom. So, what does everyone else have planned for the rest of the day? I know I'm fixing to hop off here in just a minute or two because I have to go back to work. Unfortunately, we haven't moassed yet, so yes, I still have a job to go to, and depending upon what we see in the market, may end up doing an evening stream also. It just depends. Probably on Claybro's stream, I'll ask if people are interested in popping over. Certainly, if anyone has direct options questions after work, I always have a lot more time after work than I do when I'm on lunch. So if anyone had any things they wanted to look at or specific questions pertaining to the options market, or just wanted to come in, hang out, and chat and hang out for a while, it's that's certainly possible. But I'll ask in Claybro's chat if anyone's interested. And I certainly love hanging out with everyone. Well, I want to thank everyone that came by. Riptide Pringleton, Wrestler, Danelle, Simon, and 214. Thanks everyone for coming by, and if you can help get the word out for this channel, it's greatly appreciated. So share it on social media. Facebook, Twitter, if you wanted to, post a video and tag it, or even go in and copy a link to the page, and just help spread the word and get more people interested in the channel. And it's greatly appreciated. But I hope everyone has a wonderful rest of the day, and hopefully we get a little bit of green action going into the weekend. So I will see y'all later.